Hey traders, David Frost, LazyGapTrader.com. In this video, we're talking about day trading. More specifically, we're talking about gap trading and how gap trading is by far the single most consistent and profitable day trading strategy you're going to find across the markets today. In this video, I'm going to give you several examples of gap trades from today using both strategies that are taught in my course at LazyGapTrader.com. Before we get into the charts, let me explain a little bit about what gap trading is and how we approach each and every day. And yes, you're looking at one of the trades on the screen from Tech Data. It was spot on. We'll go over that in a minute. As day traders, we're looking for opportunity. We need stocks to be moving in order to find opportunity. When stocks are gapping higher or lower at the open, it creates an opportunity for traders. And the opportunity is when traders can identify a specific price where these stocks will first be drawn to like a magnet and then have a price reaction from in the other direction. Now, in my course, I teach traders all the necessary criteria that we need in order to be successful trading the gaps. Which stocks does it work the best with? What type of volume are we looking for? How much of a gap higher or lower are we looking for? And most importantly, how do you calculate the specific price where a stock will first be drawn to and then have a price reaction from in the other direction? All that and a whole lot more is taught in my course at LazyGapTrader.com. In addition to teaching the course, I also give traders an opportunity to get my gap trade sent to them each and every day at 9 o'clock a.m. Eastern Standard Time. Here's a copy of the email that went out this morning. As you can see, it arrived at 9:01 a.m., 30 minutes before the market is even opened for business. Now, in this email, I do a couple of things. First, I give a list of the morning gap trade opportunities for the day. These are the stocks that I believe are the highest probability trades on the board. They're the ones that are moving in the pre-market activity. Now, out of this list, and we'll go over the charts in a minute, out of this list, 2 of the stocks hit the specific price levels that we identified, producing 3 total trades. Let me go over them in detail. The first 3 stocks did not hit the specific levels we identify. These are the highest probability trades on the board. If it doesn't hit the specific price level that we want, it's a no trade, it's off the board. So the last 2 did. AMBA, Amborella, gap higher. Resistance levels are $61.62 and $63.92, and a third level all the way up at $66.23. Each of these price levels represent separate and apart trade opportunities. Stop and profit target is about 40 to 75 cents. These are minimum profit targets. We'll discuss that further when we get to the charts. The last one, Nutanix, NTNX, gap higher. Resistance levels are $38.68 and $39.90. Stop and profit target is about 35 to 65 cents. Again, minimum profit targets. But watch what else I say here. Resistance levels are close together. Traders can take a partial position at the first level and add at the second if it gets there. That'll become clear when we look at the chart of NTNX. First, we'll take a look at the chart of Amborella. I have it down to a 1-minute chart for a reason. On the first price level, 61.62, the stock hit the level. It did pull back. It actually went a little bit higher than the stop loss limitation. It pulled back. It had a wide spread. Unlikely traders were able to get filled, and I wasn't, and therefore I took a loss in the first position, and that happens. We can't win every trade. That's just the way the business is. So I'm going to count the first level at 61.62 as a loss. However, let's take a look at the second level up at $63.92. I've switched over to a 5-minute chart, and you can see what happened when the stock came into the second level up at a high of 64.01, well within the stop loss limitation, and immediately pulling back in the next few minutes, making a low of $62.59. That represents a possible gain or a maximum potential gain of over $1.30 a share, and that's significantly more than the stop out on the first level. So even if you took the recommended profit target in the email from this morning, you were at least breaking even an Amborella, not the end of the world. It happens. We know we can't win every trade, but we win a lot of the trades, and that's the point of this strategy. But in fairness, I want to go over all of the trades. I want to show you the winners, and I also have to show you the losers in all fairness. Now we're taking a look at a chart of NTNX, and you'll remember, I didn't recommend stopping out after the first level if the stock was to go higher. What I recommended doing is taking a partial position and adding to it if the stock hit the second level. It never hit the second level, but look at the collapse that happened in this stock. So yesterday, the stock closes at $32.60. The stock is gapping higher at the open. It comes into our first level. It goes through our first level, but we're prepared to add at the second price level, which you don't see on the chart because it never got there. The stock made a reversal, and after the reversal, the stock comes down to make a low of $33.77. That's a tremendous collapse, even if you just got a partial position at $36.54. Tremendous gain of about $2.75 from entry point to low. And I'm not suggesting that everybody that got in at $36.54 rode the thing all the way down. That's not what I'm saying. I just want to point out what happens when these stocks come off some of these levels. Sometimes they give you a minimum profit target, and sometimes they give you tremendous gains. And here's the point. In my course, I teach traders how to turn some of these trades into risk-free, emotionless trades, which allows them to get the most possible gain on at least a part of the position. It's an entire video module in my course, and it's extremely important that traders practice certain strategies in order to maximize their gains. Now, this was the first stock you saw up on the screen, Tech Data, and you see the line on the chart at 93.22. Where did this come from? Well, remember this list from the morning? There's a second component, and I give a laundry list of potential gap fill trades for the day. These are stocks that once were gapping higher or lower, and when stocks gap higher or lower, at some point in the future, they will come back to fill those gaps. Stocks will leave what's called an open gap. At some point in the future, all open gaps will be filled. You can see here with Tech Data, TECD, the middle column is $93.22. That's the gap fill level. This was also given out a half an hour before the market opens. I give this list to my traders each and every day. You can see what happened with Tech Data. When we look at the low of the day, it's $93.16. The level in the email was 93.22, and the stock took off in the other direction, and the chart speaks for itself. At the time I'm making this video, it's up at $96.13. In the interest of time, this video is getting a little long in the tooth, so I'm going to wrap it up. But what I want you to realize is that gap trading is a strategy that you can use for the remainder of your trading career every single day. In my course, I teach traders everything they need to know in order to be successful trading the gaps. In addition, a lot of the information in the course can be applied to other types of trading activity, and that becomes clear once you've taken the course. I'm just giving traders a ton of information, and I support each and every trader that takes any of my courses. With me, no question ever goes unanswered. I'm David Frost. Thanks for tuning in, folks.